Good morning and welcome to the Opportunistic Trader for August 13th, middle of the month. I hope it all had a good weekend. A lot of overnight news and trading to go over. We were very active overnight in FX as well as in the S&P. Let me start out by going over the trade that we took home. We were flat going in to the close, and the S&P ran up a bit, went to a premium, and we sold some S&Ps, and we bought the 28.55 call to hedge the risk over the weekend. And we will always do that just so that we cap our upside or utilize stops. The market came in a little bit lower, and then after the Turkish lira started to move to all-time, lows as far as highs for the dollar. The S&P came off about 12 handles, and we covered the trade, leaving us just long the calls that we bought at $1.50. So, starting out the week well, we're looking at trades in the S&P as well as currencies and oil, and obviously, gold's been a big mover, and Vince, who's joining me this morning, was all over that towards the end of last week. So we had some nice trades in there as well. So for the opportunistic trader, we've seemed to have been on top of everything. I'm hoping that people are able to follow us clearly and take advantage of our expertise in these different areas. So I'm going to throw it off to Vince to talk about the overnight action, and then we'll talk again.
Yeah. First, as a nod, between last week's oil swing trading, the macro top-down approach that you had on the S&P and the trades you made on that, and the indicators that Greg would give us, as he was trading in FX, risk on, risk off, like he gave one at 4:30 p.m. on a chat yesterday. Looks like risk off. Let's see what happens at 6 p.m. And, he was right about that. And we're off to a good start trading. Let's see what's going on today. Okay, just pulling straight from the overnight report for a second. We are in a risk off day. We have, looking at my charts right now, we have the starting with the Turkish lira. We are, that thing is down 7%, trading 6.93. Goldman Sachs made a statement yesterday. If it goes above 7.1, 7.3 area, the banking, actually 7.1 was Goldman Sachs, 7.3 the IMF said their banking system would fail. And the market was in that area when those statements came out. Now it's backed off, or I should say rallied to 6.9. Still a big move for the market. Did I say 6.9? I meant I'm looking at the yuan there for a second. It is 6.96. It's coincidence. It's up 7% or down 7.5%. Moving on to the equity markets, we have across the board, we have this little contagion thing going on. The MSCI, the Asia Pacific Index was down 1.5 to 2%. Japan's Topics was down 2%. In Europe, the Stock 600 was about 1% lower on the lows. Turkey again took another hit. Some rulings in California are going to affect Bear. That's Bear AG, the German company. It's not a very busy week on the data front. Today we see the Treasury do sell about 100 billion of 3-month and 6-month bills. I think what we're looking at today is a lack of news until the wild card is when someone speaks to calm markets. We always have to have that in the back of our minds. But what you have is risk off. And that means starting, on my list, the metals are down, whether they be base or precious, they're being sold. Okay. Oil is holding itself down about 0.5%. Oil is basically, in some ways exempt because it is a geopolitical tool. It's also a currency, so to speak. Natural gas is actually down 1%, but that's not a huge move given the 10-year, after having a massive rally on what I don't know, given the inflationary numbers, I'm not afraid to admit I don't know why, is the yields are slightly down again. We're trading about 2.866%. The euro is trading 114, lower against the dollar. The Japanese yen lower against the dollar. Everything, higher against the dollar. The markets opened up, I should say, at 6 p.m. on the currency side. Lira, ruble, and yuan aside, with the dollar weaker against the euro and the yen. That seems to have backed off some. The Chinese yuan is stronger again. And I think for the first time, which is part of what you've been betting on, Larry, is that we are seeing not just the contagion between the trade wars, the sanctions against Russia, the pastor being sent home, not sent home, Erdogan's jawboning is now spreading from the Middle East to Europe, and now it's touching our shores. Like you said, the market was down a lot lower. Now the stock market seems to have bounced a bit. On that note, I guess I would just throw it over to you.
Thank you. Thank you for the recap. I just wanted to touch a little bit on European stocks and obviously Asian stocks. And what's been most interesting to me about all of this movement is, China's back down 2% overnight. The Nikkei was down about 1.5% overnight. And across the board in Europe, they're down anywhere from 50 to 1%. And if you look at our markets, it's kind of mystifying. If you look at the S&P, it's showing down about 2.25, but it's actually up because the cash went out at 1833 and fair value is right around there. So if we're going to come in here, stocks are actually called higher after being down about 20 points last night. And there's some good movement. We'd like to try to sell rallies in here. One of my friends who I respect greatly is trades S&Ps with me, and we've been doing it basically since 1984. And we kind of look at time periods in the month, and if we do make a high, it could be in here, and that high could last for the month. So like mid-month, usually highs are put in, so we'll keep an eye on that. And the movement is pretty good. It was funny, we were talking before we went on the air, and we were like, wow, look at the S&P move, look at the move in Turkey. And then there was some rumors that the pastors was being released, and
right.
And I guess I don't know if it's true or not true, but it's hard to discern. But it's creating good movement, and it's it's an opportunity for people that are day trading and looking for moves to trade. Looking at
I think Mike said pastor on, pastor off, as opposed to risk on, risk off.
Yes.
Elon Musk would be proud.
Yes. As far as the currencies, I don't see anything big on any of the majors against the dollar here, other than obviously, Mexico, all the EM, all the smaller currencies are getting hammered, but the euro opened around 113 and some change, like in the high 113, and traded down to like 113.60, and now it's trading basically flat on the night, and pretty much the same thing in the yen. And that's what I see. What's also interesting is today is an option expiration. The market is around 30. The 30 straddle is trading at about $13, which, if you listen to us over the last bunch of weeks, those straddles on a daily expiration are somewhere around $7 to $8. So they're pricing in some risk aversion here on the option pricing. Maybe people are under hedged or whatever that may be, but there's a good way to work around that. There's some good call spreads and put spreads out there, and
Wait, Larry, I have a question about that, direct related. So you're saying that based on, relative to history, as we approach expiration, volatility is a little high in the expiring month today.
Well, no, it wouldn't be a monthly. There's
Well, it's like a week or a day or something.
Well, yeah, no, it's daily. So
Right.
what's happened in the market is we used to have one expiration a month, third Friday.
Right.
That went on for years. Then they listed, a weekly Friday. Then they listed Friday and Wednesday, and then they listed Monday, Wednesday, and Friday. And some
Right.
weeks we have it multiple, even more than that, because you'll have a month end thrown in. So some weeks we have four expirations. So I would say this is just the daily expiration. We'll experience this again on Wednesday. It's not a quarterly. It's not a serial
So this,
expiration. But
so that's actually a better indicator of I'm just thinking out loud here. Having these short-term options constantly available allows, I think, lulls fund managers into thinking, oh, I can always buy this today, and it might have a dampening effect on longer-term volatility. But when your option expires, you have to roll it. It's like a time spread, so they have to pay up at some point if it keeps going.
right, or they may hedge the risk for the day or the week. So you might come in as a fund manager this week and say, hey, I'm a little nervous. I'm exposed long. Let me buy a Friday option. You could, there's a
Right.
smorgasbord of different option expirations you could play, but mostly, generally, the players in the dailies are, mostly, I would call short-term. I wouldn't say day traders, but short-term traders that want to, have capture a move for today, like you would have in the S&P. So now, by having that, you're clean on the close, and it's an automatic expiration that expires not into futures, but into
Cash
futures.
settle.
Well, no, into futures at the end of the day, bang, at 4 o'clock. So there's no
Oh,
waiting on expiration or anything like that. So you know your positions. So
right, right. It's simple.
that's yeah,
It's simple.
that's good to play. And
Your comment about your comment about currencies, because I'm gonna bring us back to the S&P, but I was watching Greg. We look at the currencies, but Greg, one of the team members, North Hero, the FX trader, he's got his finger on the pulse of the less watched currencies, and they seem to be like tells the way he translates. Like the US dollar ruble is a lot lower. I'm like, okay, I can get my hand around that. And then I'll talk about something like uh, the US dollar versus the ZAR lower. And I'm like, okay, what does that mean? What does that mean? And then he has the knack of saying, well, if this implies risk off, if this continues to happen, look at these pairs on the bigger situation. And then when you look at the oil trading we had last week, we had what I would call swing trading. We had Tracy, you could be bullish and sell the market, basically, she says. And so took a dollar out of the market that way. And then I think you and she, whatever my English is, took another 50 cents the other way out of the market. My question about the S&P really focuses on your type of trading. You've had an opinion last week, and it's coming to fruition now. So on my radar, not the way you trade it, because I'm not trading the S&P as aggressively as you are. I'm seeing contagion spread in every market, and now let's say it touches the U.S. shore. My question is, as a guy who's right now, let's just say for this very moment, for this second, biased bearish, you may or may not have a position, but you're looking to do something. Once it hits our shores, I get the feeling that that's when the world reacts. Like, oh, because the Swiss National Bank has their money with us. The equity market, as you said, almost sardonically last week, stocks seem to be safer than bonds these days. Well, maybe we are the protected market, and once something happens to us, activity happens. Maybe we make dollars, windows available to Europe. What I'm saying is, if we're making highs now through this crisis, are you short? Would you short? Would you consider shorting more, or will you become more bearish as this comes to our shore? Meaning, as this contagion, my perception of this contagion comes to our own markets, or do you think that might be a time to cover, as in sell the rumor, buy the news? That's
I'm looking at it, for me myself, I always have a longer term opinion on the
Right.
market, which generally is bearish. But I don't express the view all the time. I'm flexible. I'm long. I'm short. There are times I'm buying, but you know what I'm looking at here is a market that should be significantly lower basis all other markets in the world, and it's not. So relatively, this market, and it's been kind of a pattern that I've noticed over the last 6 months. They come out with bad news, whatever it may be. We could even go back to Greece like 4 years ago. Every
Right.
time there was a Greece headline, the market went a little lower and then went 10 times higher. So, what I've been saying, to everyone that I speak to on the market is that these are catalysts in a way to make higher highs. So I know that in the back of my mind, but I also know that at some point that these things that are external will take effect. And when you have China down 20%, the DAX down 5-7, and Nikkei down 2-3, and we're up 7 and 17 in Nasdaq or more
Right.
in the Qs. You know, they may still go higher, but I would say there are probably better buys out there, riskier buys, but better buys. So when
Right.
you ask me how I look at it, I'm looking at it every day. So the
Right.
S&P's at 28.32. I would buy them here to sell them at 36. That's a trade that I would do. Um,
Right.
I might sell them at 32 to buy them at 28. So we're scalping, we're trading, we're trying to be a little bit directional, but we're trying to take out what the market gives. And by looking at the straddle, in a way, it gives me the ability to size my trade and then realize what I'm taking out. So, when the straddle's $7, if I could take $4 out of S&P on a trade or five, that's what I'm looking to do. But on a day like today, you might want to size smaller, and you might want to give it a little bit more room. So if you buy them at 31, you might want to stop out at 27, 28, but that might be too tight. So you might need to almost double your stop and cut your position size in half to give yourself
This is
a little
this
bit
is
more room.
exactly, I think, worth actually having a whole interview on. You're getting into ways to manage risk by lowering your volume and widening your stops. This is the type of stuff that I'm interested in hearing, and I think subscribers are as well. If I could just boil this down, I think in a little bit more layman's terms, tell me if I'm wrong. Just in a very broad view, what we have is the world stock market's taking it on the chin, and the U.S. stock market is holding its own. So if the pressure comes off the world, you could see us rally hard. That might be the time, that might be the peak. Sort of like buying the best house on the worst block, if you're playing the real estate game. And you may be biased, bearish, looking for places to sell. That doesn't mean you're not going to be trading around the core position. It doesn't mean you're not going to be naked short. You're going to be long calls so you can sleep at night, especially if you want to have the ability to sell again if we rally. I mean, is that all reasonably accurate to what you're saying?
Yeah.
Okay.
Or if you're not going to utilize calls, you certainly have to utilize a stop level, to exit positions.
Right.
And
That you
obviously,
trust.
well,
Yeah.
obviously these instruments trade all night very actively, and obviously depending on the size that you're doing, as long as it's a reasonable size,
Right.
your stop will be elected and you'll be out the same way.
I
like to use the calls though, for me.
I hear you. I think an important takeaway for anybody who looks at a market and says, "Oh, that's too volatile for me to trade. I can't trade it." Well, if you like to trade, if you're comfortable trading, let's say oil, right, and you're comfortable trading two lots at a time, and then you look at something like natural gas or Bitcoin, or you're not trading it, but let's just say you're the Turkish lira. What I think part of Larry's saying is you can protect yourself by saying, "Hey, this is twice as volatile." Simplifying it, I'll trade half the size. Why? Because I can make the same amount of money with the same amount of risk doing the same things, and not have to worry. The volatility isn't risk if you manage your capital properly. And I think that's what you're saying. And using those daily straddles gives you good indication of what the market's perception of potential ranges.
Yeah, again, if you look at it, let's equate it to probably the most volatile, which would be the Turkish lira at this point. It moved, 25% on Friday. I think it moved, 10% or over that last night. Straddles have to be priced very, very high. To me, you got to look at, on something like that, you got to look at bid offer spread, okay, which we heard was, 0.5% or 0.75% wide, which probably isn't really even that illiquid, but you got to realize that your slippage is tremendous in that. So, to get in cost you, to get out cost you, and it may not be a place to really frequent to utilize discipline and hedging, because it's impossible to operate in. Like the S&P, if you look at it now, it's always one box wide until it's not. But it's been always, even in '08, it was moving like crazy and it was one box wide. So, you kind of know where you're out.
Wait. What's one box mean?
One
to people
minimum,
who are not familiar.
Okay, minimum tick wide, so 25 cents. When I used to trade S&P in the pit and on the floor, the S&P was quoted at least 4 boxes, or in this case, $1 wide. Sometimes
or a full
$2.
handle, used to call it. Right?
Exactly.
Yeah.
A full handle wide. And now, you know what your slippage is. So it's very easy to operate. It's very important to understand that. That's critical to trading, is you always have to know you're out, or think you're out.
Your exit strategy is based on liquidity. Exactly. I'm sorry, I'm not interrupt, because we could do this all day. I know people want to trade, especially you. Just across our wire, the German Chancellor Merkel says that Turkey's central bank independence is important. Okay, we knew that. Also, just across the wire, in terms of past or risk on, risk off, the U.S. embassy official in Ankara says they have not. No statement has been put out regarding the U.S. Pastor Brunson. So if you're playing the risk-off game, there you have it. And that's courtesy of Greg, who's online now. So it looks like it's going to be a good week to trade them up if you're starting out. We ended the week last week very well, and this week looks good as well. Just on the metal side, if you read the reports that were sent out last night, the Gold Weekly report had, I think, some salient information on gold and silver. Silver is now below that physical buying level. So either the buyers are done or they're pulling back. You want to sell rallies, you want to buy dips, I don't know. But I would expect volatility in those markets to increase now. And the commitment of traders has been allegedly bullish for a month, and yet we're lower. So you can't play that game all the time and win.
No, I wanted to just touch on one thing. I mean, your gold call has been spot on, and I'd like to hear a little bit about that, and if you have any levels in here that you would buy, or do you think as we are making fresh lows on the opening here, is there a level that you would buy, or do you just remain short and have some trailing stops? How would someone out there play it?
Right. If you're trading gold today, we're below every weekly number. I'm a top-down person, so all the weekly information that I have has been busted. So you should be trading, I would be trading short-term formations that are in the hourly on a tops of 4 hour, looking for. What I'm looking for right now, if I wanted to get long, would be a long wick at the bottom of a candle and a new low that does not generate a new low in an RSI, a short-term RSI. If you don't know what that means, you can ask on the chat. At the end of the day, I would like to see, if you want to be, again, we're saying with the bullish side, at the end of the day, if we end up, let's say, unchanged, and open interest is higher or unchanged, that's bullish. But as a day trading level, I have numbers. I'll send them to you. They're from an excellent technician, but I'm looking at it from a momentum point of view. And for me, it says if you're putting a gun to my head, Larry, basis spot, I would be short under 1202.20 with the reversal above 1206.5. So that puts us basically December. That puts us basically short under 1209 and long above 1214. And it's basically a short-term off-the-cliff trade. I don't like to. It's hard for me to trade the lows. That's a problem for me unless it's with options, as stated in the report, because I frequently see that when the market has been basing for a long time, there's one slam that gets people short, really undercapitalized people short, and it goes down, and then the market will reverse the next day. If you're a candlestick person, you want to look for evening stars to get long. If you want to be a bear, I wouldn't sell weakness with futures. I would sell strength, flagging hourly charts. But I would have, and I didn't do it, I would have been long puts Friday on Friday's close based on where we settled. I do not think volatility is going to be lower. I don't think that's much help for you right now, Larry. I'm sorry. But I'm more comfortable giving you a number in silver, though, because silver has been very consistent. I would sell rallies below 1223 in spot, and I would trade the range with a bearish bias down to 14.95. Gold could go to 1140 now on a long-term basis. I can't say it should. That's crazy. It's crazy. But if you're a weekly technician, that's crazy. I mean, that's what's happening. There's a lot more fundamental secular bear stuff out there than people understand. I think I just talk too much about it, but I missed it.
I just picked up, interestingly enough, over the last couple of minutes, the S&P has turned positive on the night after being down about 18. It's actually 5 above fair, which means stocks are going to actually open strong. And if you look at the Treasury complex, all durations are on the low, which is obviously, not following the risk-off mantra. So,
right.
That's something to look at. And, it's a complete turnaround from overnight. And, I mean, if we're rallying because of, Turkey news, on and off, it's pretty impressive. But as far as broad markets, S&P's on the high tick. Oil came back about 20 cents here, and all of the bond complex is on the lows, and Nasdaq reversed from down 50 to be up 12. So it's looking like an up opening, unless something happens, and we'll look at it from there. I think gold is interesting. I don't really trade it all that much, but the last time I was trading it was about $130 higher. So, if
exactly. I think to distillate for people watching and saying, why is it doing this? To try and understand in a logical, intellectual way, this is bad news. Why is the market rallying? And the next day, the same type of bad news comes out and the market sells off. That's a trader has to, as you're saying, implying, has to understand what the market values as important. So risk off, shouldn't gold be higher? Well, no. And you have to understand that the market is perceiving it that way. Risk off, shouldn't bonds be higher? Well, no, not if stocks are higher. Maybe people that were long bonds and had a nice little rally on Friday internally are rolling into stocks, and that's helping us a lot. Yep. So, the mechanics are unknown, but the reactions have to be filtered.
But what I found in scouring the tape and watching, pretty much every tick, these markets go first. So, gold being lower, is maybe a tell, and the bottom line is, bond not being higher with the S&P down 20, maybe a tell. These quants and computers are getting in front of stuff. And then
the S&P was down 20. You mean earlier before the market returned?
No, I'm saying when the S&P was down 20, bonds.
Oh yeah, the other day.
Bonds were barely higher overnight. And
right.
Gold was lower, and oil was barely down. So these things are all tells, and then all of a sudden the S&P rallies 20 handles and then puts everything back in line. So
Right.
it's been interesting to see all of these these things that correlate, decouple, and really finding the trade that works. But gold, continues to be weak, and bonds. We were looking this morning and we were talking, and bond 10-year notes were yielding like 286, and then bang, they're back, down to 288, 290 area, and,
Yeah.
and heading back the other way. So it's all interesting, but you know what? The volatility is definitely up. It creates opportunities for us, and I see a lot of stuff percolating here. So we'll be working with ideas all day.
Traders market. Exactly.
For sure. So I just wanted to go over today at 9 o'clock. Greg North Hero, our FX specialist, will be on talking about Turkey, amongst other things, and currencies. And Greg is very, very active. He was working and trading all night. He and I were texting, pre-opening the cash at 5 o'clock, and what thoughts were incorporating S&P action, or the S&P opening into the action that was already occurring in the cash currencies. He's very, very insightful, and provides a great look at the currency markets from a trading level. And then today at 10 o'clock, I have the pleasure to have Phil Flynn on talking markets, and Phil is a Fox contributor. He's on Fox multiple times a week, and I've known Phil for a very, very long time and follow his research. And then after that, we will have Adam Collins coming on, and Adam Collins deals with the commitment of trader data, and he parses that out, and he looks at positioning, which I think is really, really important in these markets, and seeing where the specs are, and all of that, and seeing where positions are overcrowded, and having the ability to trade off of that. And I utilize that data pretty much in my trading as well. So we'll hear from him, and then we'll be in the chat all day providing ideas, and we look forward to seeing everybody in the chat community, and good luck to everyone trading.